Buying a home and getting a mortgage can be one of the most daunting tasks that you do. As a matter of fact, it's probably the most expensive expenditure that you might ever make in your lifetime. Most people, that's the case. Now, I ought to know how stressful it is because I've been a lender for 35 years and have helped thousands of people buy their dream home. So, today, what I'm going to do is I'm going to share with you some of the insider tips on gathering up all of the information that you need for your loan officer to get pre-approved. Now, this is going to make this process so much easier. I promise you, if you pay attention to what I say today, you're going to have a heck of a lot easier time in the mortgage process. Now, the very last screen, I want to bring this up, the very last screen, be prepared to screen print that because it's a checklist of all the things we talk about today that you'll want to gather up and have ready for your loan officer. So without further ado, why don't we go ahead and get started and talk about all the things that you need to know. Now, the first thing we're going to talk about is opting out of having your credit report, actually credit information sold. This has nothing to do with your loan process. This is just for your sanity. Now, recently, this video is being shot in October of 2025. Now, recently, there was a law that was passed and was signed into law by the president that these companies that credit reporting companies would sell your information. So as soon as a lender would pull your credit report, they would make extra money by selling the fact that you had your credit run for a mortgage. So every mortgage company, realtor, alarm company, insurance company under the sun will blow your phone up. And even if you don't put in your cell phone or your phone number, they've already got it. Trust me, these credit reporting agencies have got stuff on you that you have no idea. So they will sell that information unless you opt out. Now that supposedly is going away in March of 2026, but even after that date, if you're watching this and it's after that date, I highly recommend you go to optoutprescreen.com. You're going to scroll down to the very bottom of the page, then click the button to go to the second page. It'll allow you online to opt out for up to 5 years of having your information sold. So highly recommend you doing that. I've known people that did not opt out, had their credit pulled, and they got more than 50 phone calls in the first day. So it's not something that loan officers require that you do, but it's highly, highly recommended. So if you don't want to drive yourself nuts with telephone calls and telemarketers, opt out first. Now that does take 3 or 4 days to take effect, so you want to do it before you start shopping. So the next thing we want to talk about is the personal information that you're going to need to have. Now, obviously, the driver's license is very important. So, driver's license is going to be something the loan officer asks for. They're going to want the front and the back. Now, most states have those holograms on the driver's license. You want to make sure that you've got, and a picture is usually fine. So, you want to make sure you take your phone and you position it around so you could actually read it because sometimes those holograms will obscure the picture a little bit. So make sure you get a good picture of the front and the back. It's legible for your loan officer. The next thing you want to remember is something that very few people realize. It's mortgage lenders want to know that you've been paying your mortgage payments. So if you've got if you rent and don't have a mortgage, they're still going to want to see that you've paid your rent payments for the last 12 months on time. The same with a mortgage. Now, if it's a mortgage, it might be reporting on the credit report, and that's okay. But it's been my experience that maybe the last month or two isn't showing. So they're going to ask you to either get bank statements showing that those payments are made or the front and back of a canceled check showing that those payments are made. There are instances where they can do what's called a verification of mortgage or a verification of rent, meaning they can send that to your landlord. But if you're renting or you've got a mortgage with an individual, not a company, then they're probably going to want those. They probably won't accept a verification of mortgage, something signed by your landlord. If you think about it, if you haven't been paying your bills, they probably want you out. Or they want you to pay off the mortgage and sell the property. So they want you to get a loan and get out of their hair if you haven't been paying the bills. So that's why they typically don't take it off of individuals. So if it's a company, they can usually do a verification of mortgage. But in the meantime, what I would do is either collect 12 months canceled checks or 12 months bank statements showing those payments are made. Make your life a lot easier. And then finally, in this category, and this really isn't something for individuals, but more for investors, they want to see that you've got experience. So if you have done some rentals or flips or maybe ground up construction deals for as an investment, you might want to write down all of those. They usually look back about 36 months. So you want to write those down and have those available for your loan officer because the more experience you have as an investor, the better the deal tends to be. Income verification. Now, this pretty straightforward if not self-employed. If you work for somebody else, you get a W-2 and a pay stub. Really simple. 2 years W-2s, last 30 days of pay stubs. If you're at the beginning of the year, you've had a significant change in your income, they may ask for the very last pay stub of the previous year to kind of see the breakdown. What they're really looking for in your pay stubs will be the year-to-date figures. They want to see everything broken down and what you've made year to date, how it's broken between salary and maybe commissions or some other kind of variable pay. So make sure 30 days of worth of your pay stubs and 2 years W-2s. Very important. Now, if you're self-employed, it gets a little more complicated. What I want you to do is, first of all, take your last 2 years of tax returns. So here in 25, you're going to have your 24s and 23s. Scroll down in your personal returns to the Schedule E as an elephant. This first half of that's rental property. So if you do have rental properties, you want to get your tax returns as well. But look at the second half of the Schedule E, and it'll show you different entities like LLCs, S Corps, that you may have ownership interest in. And if they appear there, then you want to get those tax returns as well. So let's say that John Doe also owns XYZ LLC. You're not only going to want to get 2 years tax returns for John Doe, but you're also going to want to get them for XYZ LLC. You want to make sure that you get all pages. Don't leave anything out. And it's really important. There's going to be a lot of add backs, meaning depreciation, amortization expense, certain expenses that you write off as a business owner. You can add those back, and your loan officer should know how to do that for you. Don't forget the K-1 forms. Some people don't include those, but underwriters are going to see the K-1 forms that come usually with the corporate returns. But make sure you're getting those for your loan officer as well. Now, assets. Really, all this is it shows your bank accounts and brokerage accounts. They want to see that you've got the liquidity, meaning the cash in the bank, to be able to pull off the transaction. Do you have the down payment? Do you have the closing costs? Do you have a little bit left over, what they call reserves, meaning after you close this loan, they don't want you spending your last dime to close the loan. They want you to have a little bit of money in the bank afterwards. Now, there can be things like gifts and whatnot. Your loan officer can actually shepherd you through that process. But overall, they want to see that you got enough in the bank for the down payment, closing costs, and a little bit extra in reserve. Okay. So when you get the bank statements, don't just get screenshots. They won't accept them. Get the full bank statement. Log on to your online banking, download the full bank statement from there. Go to the bank, have them print out the full bank statement. Make sure it's got the logo. Make sure it looks like a real bank statement. Your loan officers are going to let you know if there's a problem right away. But 2 months of all of your bank statements. Make sure they're not redacted. Meaning, I don't want to show my account number, so I'm going to mark it out. That won't work. Fannie Mae, Freddie Mac have rules against that. They want to see the full unredacted bank statement. If there's large deposits, that's something else that people miss a lot. Fannie Mae has a rule that if you deposit more than 50% of your monthly income into one of the bank accounts, they want a paper trail on it. They want to see where the money came from. Basically, what they're saying is they want to see that you didn't go out and borrow the money and there's another loan floating out there that they don't know about. So they want to. You might have sold a car. You might have gotten a gift. Who knows where the money came from? But you need to be able to explain it if it's a larger deposit than 50% of your monthly income. Be prepared for that. And that's on any of the bank statements, including the brokerage statements. Make sure that you're also disclosing everything. Now, you really only need enough for, like I said, down payment, closing costs, reserves. But when it comes time to score, and we're going to talk about the automated underwriting system a little bit later on, but when it comes time to score the application, meaning we're taking a look at the application and we're going to decide how good of a deal you're going to get. The computer actually does that for Fannie Mae and Freddie Mac, and we'll talk about that pretty soon. But I always recommend going ahead and let's win this by a couple of touchdowns. Let's try to get more information than they ask for. So if you have retirement accounts, brokerage accounts, more deposit accounts than you think you need, go ahead and share that with your loan officer. They'll decide what to upload and what not to upload. So highly recommend that. It might actually help you get a little bit better deal. Credit. This is a little bit controversial, and I do things a little weird in the fact that I pull credit last. I don't pull it up front like a lot of people do. For a couple reasons. Number one, the credit report used to be about $34 a couple of years ago, and then these credit reporting agencies, the same ones that are selling your information, are trying to make a lot more money. So what they've done is they've raised those rates up. So right now, a credit report costs us $96 to pull. That's a tri-merge, pulling all three of the major credit reporting agencies in one report and getting the 3 scores for each individual. So it's $96. It's, we don't want to waste your money by doing that, number one. Number two, we don't want to put an inquiry on your credit report. So some of the things that I ask about people to do, and it's down a little bit in this list, is instead of pulling a credit report, try to tell us where you think your credit's going to be. And then also take some time to write down every creditor you have, the balance, and the payment. If I know that going into it, I can get you a pretty good idea where you're going to be. By the time I check your bank accounts, by the time I check your income, once we get to the very end, at that point we pull credit. But I don't like to do it beforehand. Now, the consumer credit reports that you get online, whether it's Credit Karma, MyFICO, there's all kinds of different scoring models. For mortgages, cars, they're very different. It has been my experience that Credit Karma, for instance, is way above. The numbers are a lot higher than what the actual numbers will be when you pull credit for a mortgage. So mortgage scores tend to be a lot lower than what Credit Karma says. So don't be surprised if you think, hey, my Credit Karma score is 720 and it comes in at 680 or lower. Don't be surprised. That is pretty normal. Okay, it happens almost everybody. So don't be surprised. Let's talk also about other properties. One of the issues that lenders want to see, and it is a Fannie Mae Freddie Mac rule, is they want to make sure that you're paying all of your mortgages, not just the place you live now, whether it's a house or you're renting. If you have rental property, they're probably going to want to know something about that as well. So you want to make sure that you get your most recent mortgage statement. You want to make sure that you've got another 12-month payment history on that. It might be on the bureau, it might not. You want to get your last tax bill, and a lot of times you can pull that from the county tax collector's office. Most of those are online, and you can just pull it up in a matter of seconds. You want to get your most recent homeowner's insurance, your current homeowner's insurance, and your insurance for the flood. For a flood, if you're in a flood zone, you have flood insurance as well. Want to get both of them if you have that. And then if you're in an HOA, get the HOA bill. Believe it or not, all of those will typically go towards the calculation of your debt to income ratio. So they're going to need to know about that information. They're going to ask for it. Now, here's the automated underwriting part, called AUS. I used to call it DU. Hey, I'm running DU. Remember that? Well, it's actually DO, Desktop Originator for Fannie Mae, and Loan Prospector, LPA for Freddie Mac. And what you're looking at on the screen is actually a screen print of a real live run of the automated underwriting system and the results. So what we do, and most lenders have this, we'll actually finish up your application, upload the bank statements, everything else in there, click a button, and it goes out to Freddie Mac and Fannie Mae, and it scores your application, and it tells us whether they're going to approve it or not approve it. And that's a very, very important thing. If it comes back that you're not approved, doesn't mean you're not going to get a loan. We have certain things called manual underwrites. We'll actually take a little harder look at an FHA loan like that. Most places won't do a manual underwrite for conventional loans, but FHA they will. Also, we have what's called non-QM or non-qualifying mortgages. So those are the just missed. Maybe there's a ratio that's out of whack and it doesn't quite fit guideline. Well, still might be a great credit risk, and we might still do that loan and have a program for you. So most loan officers are going to be like that. Now, here's the part that I wanted to share with you that I really want you to take the time to screen print this. So go ahead, screen print this page. This is a good checklist that you can take and check off all of these items and have it prepared for your loan officer to get pre-approved. Highly recommend doing all of this before you go shopping for a home, because how's that realtor going to know what you qualify for and driving you all over town and showing you houses if you haven't went through this process? So get pre-approved before you do that. So real quick, driver's license, front and back, we talked about that. 2 years W-2s, 30 days of pay stubs, we talked about that. If you're self-employed, or you have rentals, you're going to want 2 years worth of your personal returns. And if you have separate returns for businesses, you want to grab those too. And you might have more than one. So we talked about John Doe owning XYZ LLC. You might also own ABC LLC, and it flows through there. Get them both. Get all the returns that show up on that Schedule A. For all properties, last mortgage statement, homeowners and flood insurance declarations page, your last tax bill, and the HOA payment bill, and make sure that you're able to show that you've been paying those mortgages for the last 12 months. Give us a ballpark of your credit score. Most loan officers, it really helps them to know what kind of program to start focusing on first before they pull credit. And if you do that, if you can provide a list of the creditor, car payments, credit card payments, student loans, personal loans, with the balance and the payment. Now, that's the minimum monthly payment. Don't put, well, I pay more than the minimum, so I'm going to put that on there. No, put the minimum, because we're trying to get the lowest possible debt to income ratio. Just the minimum required payment, not what you're actually paying. And then here's the key. The loan officer is going to ask for, she asks for things. It's not for their health, okay? They're wanting to get you approved. They're not nosy. They have to have these items. So if I've got a client right now that's really fighting me on giving us bank statements, and the problem is that we're probably not going to be able to give that person a loan because they won't give us the bank statements. Underwriter says, "Gee, what are you hiding? We want those bank statements." And it is a requirement of Fannie Mae, Freddie Mac, and most of these programs. So if the loan officer asks for something, just give it to them as quickly as possible. It's going to make your life a lot simpler. So I hope you found a lot of value out of this. Remember to screen print this. Go back, watch the video again. If you have any questions, certainly put a comment down there and I'll try to answer them personally. Have a great day.